Hello, and welcome to this webinar on criminal lifestyle in confiscation. You should find at the bottom of your screen, you've got some little buttons, including one that says Q&A. And if you hit that, you should be able to type in any questions that you want to ask me. Hopefully, I'll get a chance to answer them before the end of the webinar. If not, I will contact you afterwards and email you an answer. Okay, let's make a start. My name is David Winch. I'm a chartered accountant and a director of Bartfield's Forensic Accountants. And this session, we're going to look at criminal lifestyle in confiscation. We've quite a lot to get through, so let's hit the agenda straight away. We'll start off with what is a criminal lifestyle, then the implications of that for benefit, which is the key area that we'll be looking at today. But there are also implications for available amount, and we shall talk about them. And then talk a little bit about the slightly more complex area where a person has a second criminal lifestyle confiscation order made against them. And finally, we will wrap up and I will say a little bit about how Bartfield's Forensic Accountants can help you. Okay. So what is a criminal lifestyle? Well, it has nothing to do with the defendant's lifestyle. Like a lot of terms used in confiscation, it doesn't mean in the context of pocket proceedings what it means in everyday life. It does in fact depend solely upon the defendant's criminal convictions. And there are four alternative routes to a criminal lifestyle under section 75. What that means is that if you satisfy, or if the defendant satisfies one of the criteria for a criminal lifestyle under section 75, then he does have a criminal lifestyle. And if he does not, then he does not have a criminal lifestyle. Route one is the simplest and most straightforward. Where the defendant has been convicted of at least one offence listed in Schedule 2 to the Proceeds of Crime Act. I mentioned Schedule 2 because we're talking here about the Proceeds of Crime Act as it applies in England and Wales. If we were in Scotland or Northern Ireland, there's a different schedule, but with similar terms. One of the things to remember about this Schedule 2 list is that it's not necessary for the defendant to have obtained any benefit at all from the offence. If it's an offence listed in Schedule 2, then he has a criminal lifestyle. What offences are in Schedule 2? Well, they include most drugs offences. Perhaps surprisingly, they do not include cultivation of cannabis, contrary to Section 6 of the Misuse of Drugs Act 1971. But these days, one mostly sees that sort of activity charged as production of a controlled drug, contrary to Section 4, and that is a criminal lifestyle offence. Money laundering offences are included in Schedule 2, but only under Sections 327, which is transfer, convert, conceal criminal property, or Section 328, which involves entering into an arrangement concerning criminal property. The Section 329 offence, the possession or use of criminal property, is not a Schedule 2 criminal lifestyle offence. There are some trademark and copyright and counterfeiting offences listed, and various other offences, including, for example, blackmail, arms trafficking, people trafficking, those sort of things. And conspiracy or an attempt to commit a Schedule 2 offence is itself a Schedule 2 offence. That was the simple one. Now let's get a little bit more complicated. Route 2, where the defendant has been convicted of at least one offence committed over a period of at least 6 months, from which he has obtained a benefit of at least £5,000. Let's take an example. A social security benefit fraud offence continued for a period over at least 6 months, which has resulted in a benefit of at least £5,000. If the defendant has been convicted of that, then he has a criminal lifestyle. Or another one, a tax evasion offence, continued over a period of at least 6 months, which has resulted in evasion of tax of at least £5,000. Again, results in a criminal lifestyle. Again, an employee abusing his position of trust to defraud his employer over a period of at least 6 months and obtaining a benefit of at least £5,000, that results in a criminal lifestyle. Now, one of the features here is that it is important exactly what is charged on the indictment. Let's imagine an employee has stolen some money in February and he's stolen some more in April and some more in August. He might be charged with a single count of abuse of position of trust over a period of more than 6 months, which encompasses those 3 thefts. And that would result, a conviction for that would result in a criminal lifestyle finding. But if instead he'd have been charged with 3 separate offences in relation to the 3 occasions, then he wouldn't have a criminal lifestyle because none of those 3 offences would be carried on over a period of at least 6 months. So it is important to look carefully at what the conviction actually is for. That's route 2. Route 3. The defendant has been convicted in the same proceedings of at least 4 offences from which he has obtained some benefit. So what I'm saying here is that he's obtained some benefit from at least 4 separate offences, some benefit from each one. And the aggregate benefit which he has obtained from all the offences is at least £5,000. So let's take an example of that. Suppose a defendant is convicted in the same proceedings of several offences of, let's say, fraudulently transferring to his own bank account on various dates monies held in the account of a vulnerable person for whom he held a power of attorney. Let's say the amounts transferred in respect of the 4 different counts on the indictment were £250, £300, £2,000 and £2,500. Well, the total there is £5,050, so at least £5,000. There is at least 4 separate offences dealt with in the same proceedings, so this defendant, having been convicted on those 4 counts, has a criminal lifestyle. Route 4 is the most complex and the one you're least likely to see in practice. This is where the defendant has now been convicted of 1 or more offences, and he has also been convicted on at least 2 previous occasions within the past 6 years of offences. And from each of those offences, he's obtained some benefit, and the aggregate benefit which he has obtained from all these offences is at least £5,000. So let's have an example to make that a little bit clearer. A defendant was convicted of a theft of £1,000 in 2015. He was back in court and convicted of another theft of £3,000 in 2018. And he's currently being sentenced in 2020, having been convicted of yet another theft of £1,500. So the total benefit of these offences is £5,500. Because he has been on at least 2 previous occasions within the past 6 years convicted of offences from which he's obtained a benefit, and because the total benefit from all of the offences, including the latest one, is at least £5,000, then this defendant has a criminal lifestyle. What about offences taken into consideration? Well, it should be remembered that where other criminal conduct is taken into consideration on sentencing, any benefit from that conduct counts towards satisfying the aggregate of £5,000 of benefit required under routes 2, 3 and 4. So be a bit careful about offences taken into consideration. Okay, so that's sorted out whether or not a particular defendant has or has not a criminal lifestyle. What are the implications of a criminal lifestyle for benefit? Well, let's look at benefit a little bit. POCA refers to two categories of criminal conduct. Particular criminal conduct is the conduct concerned in the specific offences which form the grounds for the confiscation proceedings. And there's a reference there to subsection 2 of section 6. And other offences of which the same defendant is convicted in the same proceedings, and other offences taken into consideration when sentencing the defendant for those offences. So all of that is the defendant's particular criminal conduct. But POCA also refers to general criminal conduct. And a defendant's general criminal conduct is the conduct concerned in any and all criminal conduct in which the defendant has been engaged at any time. So it's a very wide, all-encompassing definition, that general criminal conduct. And of course, that means that the defendant's particular criminal conduct is a part of his general criminal conduct. The benefit of any criminal conduct is the value of property obtained as a result of or in connection with that conduct. And that includes a sum of money equal to the value of any pecuniary advantage obtained as a result of or in connection with that conduct. When the court makes a confiscation order, it should concern itself with the benefit of the defendant's particular criminal conduct if he does not have a criminal lifestyle, and the benefit of the defendant's general criminal conduct if he does have a criminal lifestyle. The benefit of the defendant's general criminal conduct will include the benefit of the defendant's criminal conduct at any time, including benefit in respect of convictions for which he has previously been sentenced, but where no confiscation order was made, and including the benefit found in any previous confiscation orders at any time against this same defendant. And we'll talk a lot more about this in a minute, assumed benefit now arising under the statutory assumptions of section 10. So there is an architecture within POCA which says that general criminal conduct includes any and all of the defendant's criminal conduct at any time. But when we're looking at his general criminal conduct, we must make a deduction for the amounts required to be paid under previous confiscation orders. So that ultimately we are going to make a confiscation order against a defendant who has a criminal lifestyle in respect of his benefit of general criminal conduct. And the architecture within POCA is to include everything in at any time, and then make a deduction for the amounts which he has previously been required to pay under previous confiscation orders. Not the benefit found under previous confiscation order. The deduction is for the amount required to be paid under previous confiscation orders. That's the structure within POCA. But in practice, you will find in a section 16 statement, a prosecutor is unlikely to go for all that benefit. What the prosecutor is much more likely to do in practice is to look at the particular criminal conduct involved in the proceedings that we are now engaged in, and to add on to that, assumed benefit arising under the statutory assumptions of Section 10. So the prosecutor, by doing that, will be limiting the extent of the benefit he's bringing into the confiscation proceedings. And of course, the defendant is not going to want to object to a reduction in the amount of benefit that's brought in. I mentioned the statutory assumptions. Let's first assume that we're dealing with a defendant who has never previously been subject to confiscation proceedings in which statutory assumptions have been available to the court. That makes life a little bit easier, a bit simpler. In a few minutes, we will deal with a defendant who has had a previous criminal lifestyle confiscation order. But for now, we're assuming the defendant has never previously been subject to confiscation proceedings in which statutory assumptions have been available to the court. There are 4 statutory assumptions in Section 10, and it's easier for me to deal with them not in the order in which they actually appear in Section 10. All of the assumptions are subject to an overriding caveat, which I'll mention in a minute. So, first assumption I'm going to deal with is it's assumed for the purpose of valuing any property that the defendant obtained it free of any other interests in it. Secondly, it's assumed that any property held by the defendant at any time after the date of his conviction was obtained by him as a result of his general criminal conduct, and at the earliest time he appears to have held it. Notice there's no mention there of the relevant day. We're dealing here with property held at any time after the date of the defendant's conviction. And right the way through here, when we talk about property, we're using that in the legal sense of meaning any asset which might be tangible, intangible, or whatever. It is assumed that any property transferred to the defendant at any time after the relevant day was obtained by him as a result of his general criminal conduct and at the earliest time he appears to have held it. So that is property transferred to the defendant at any time after the relevant day. We're talking here about things like credits to a bank account. And the final assumption, it is assumed that any expenditure incurred by the defendant at any time after the relevant day was met from property obtained by him as a result of his general criminal conduct. So again, after the relevant day, expenditure incurred by the defendant after the relevant day. The relevant day, which we've mentioned in these last 2 assumptions, means the first day of a period of 6 years which ends on the day on which proceedings for the offence concerned were commenced. The offence concerned means the offence which forms the basis of the confiscation proceedings. And proceedings typically are commenced on the date on which the defendant is charged with an offence. You can look in more detail at when proceedings commence under different regimes by looking at subsection 1 of section 85 of POCA. So let's take an example. George is charged on 3rd of June 2020, today, with an offence under Section 4, Misuse of Drugs Act 1971, supply of a controlled drug. Let's say he's ultimately going to be convicted of this offence on the 17th of November 2021. The relevant day is going to be the 4th of June 2014. That is the first day of the period of 6 years, which ends on the date that George is charged. And so 2 of the statutory assumptions apply to the period after 4th of June 2014. And the other assumption applies to property held by George at any time after the date of his conviction, which is 17th of November 2021. Let's say that George is going to be made subject to a confiscation order at a hearing on the 12th of May 2023. So two of the statutory assumptions will apply to the period after 4th of June 2014 up to the 12th of May 2023. That's sometimes referred to as the 6-year period, but as you can see, it isn't actually a period of 6 years. And the other assumption will apply to property held by him at any time after 17th of November 2021 up to 12th of May 2023, the day the confiscation order is made. I mentioned overriding caveats, and these are that the court must not make a required assumption in relation to particular property or expenditure, so we're looking item by item, if, on a balance of probabilities, the assumption is shown to be incorrect, or there would be a serious risk of injustice if the assumption were made. Note the order of the words here. A serious risk of injustice, not a risk of serious injustice. The initial burden is on the prosecution, and let's not forget this. The initial burden is on the prosecution to show, for example, that property has been transferred to the defendant or expenditure has been incurred by him after the relevant day, such as credits to a bank account held solely or jointly by the defendant. That will be an example of property transferred to the defendant. Incidentally, I haven't mentioned here credits to a bank account held by a company in which the director perhaps owns all the shares. Well, the reason that I haven't mentioned that is that involves issues concerning piercing the corporate veil, and we're planning to look at them in a fortnight's time. So, credits to a bank account held solely or jointly by the defendant will be property transferred to him. If the prosecution can show that that happened after the relevant day, then that gets them across the threshold, across the initial hurdle, satisfies the initial burden. Or another example, suppose the prosecution searched the defendant's home and find a paid invoice for the purchase of a motor vehicle. That will be evidence of expenditure incurred by him, and if it's after the relevant day, then that will satisfy the burden on the prosecution to show that expenditure has been incurred. If you need case law on that, there's reference to a case there, paragraphs 12 to 15 in Whittington. Just if you need to prove to the prosecution any time that the initial burden does indeed rest on them. And then the burden shifts to the defendant to satisfy the court, again, on a balance of probabilities, that, for example, the monies or property are derived from a legitimate source. That would be a way of showing that the assumption in relation to that particular property was incorrect. Or that there's a duplication inherent in the prosecution assertions. That would be a way of showing there to be a serious risk of injustice if that assumption were applied, as it were, twice. A forensic accountant's report can be particularly helpful in presenting information to the court, which may assist the forensic accountant, which may assist with an examination of records of past transactions and ownership of assets, so that the forensic accountant can help the defendant pull together information to show to the court legitimate sources of property, for example. And the forensic accountant can also search out duplications and other errors in the prosecution's asserted benefit computations. Okay, that's dealt with the implications for benefit of a criminal lifestyle. Now you might say, are there any implications for available amount? Well, there are, and they are in the area of tainted gifts. A defendant's available amount includes the value of any tainted gifts he has made. If the defendant has a criminal lifestyle, a gift will be a tainted gift if it was a gift, which includes a transfer at significant undervalue, and either it was made after the relevant day, or it was a gift of property which was, or which represents property which was, obtained as a result of or in connection with the defendant's general criminal conduct. Now again, don't forget that the defendant's general criminal conduct is any and all criminal conduct of his. So it is possible that there might be a tainted gift prior to the relevant day, if the defendant has been involved in some criminal conduct prior to the relevant day. And in that case, and really only in that case, where you've got a gift made prior to the relevant day by somebody who has a criminal lifestyle, only in that case is it actually necessary to show that there is any taint attached to the property that's gifted. If we look back at this definition, what we're saying is that if it's a gift and if it's after the relevant day, it's a tainted gift. So if the defendant has received, let's say, a legacy from his mother-in-law, who's a saint, and he's received that after the relevant day, and then he's given that money on, let's say, to his children, that money itself may not be tainted by any criminality, but the gift to his children will be a tainted gift because it's made after the relevant day. And that means it will be included within his available amount, which has implications for the confiscation order. The relevant day here has the same meaning as we've already mentioned, the first day of the period of 6 years, which ends on the day on which proceedings for the offence concerned were commenced. But that definition is actually in section 77 rather than section 10. And there is some significance to that, as we'll hear later. In contrast then, where the defendant does not have a criminal lifestyle, a gift is a tainted gift, again, if it's a gift, and it was made after the date, or the earliest date, on which the defendant committed his particular criminal conduct offence. So you see the difference there between the provisions where there's a criminal lifestyle and where there is not. What do we mean by a gift? Well, apparently for there to be a gift, there must be transfer of legal and beneficial ownership in an asset, acceptance of the gift by the donee, no intention on the part of the donor that the asset should be returned to him. So it's not just a loan, it's a gift. And the transfer be either without consideration or at a significant undervalue. And there's case law there, which you can refer to. Okay, I mentioned that I'd talk about the implications of a second or subsequent criminal lifestyle confiscation. The relevant day on a second criminal lifestyle confiscation is the later of the date on which the latest previous criminal lifestyle confiscation order was made, or the normal relevant day, 6 years before the date of commencement of proceedings. So what that means is that you might have a period of less than 6 years where there has been a relatively recent previous criminal lifestyle confiscation. Where there is property held by the defendant at any time after the date of his conviction, and that property was held by the defendant on or before the date of the latest previous criminal lifestyle confiscation order, and that order was made on or after the first day of the period of 6 years, which we've referred to earlier, then the statutory assumption relating to property held after the date of conviction shall not apply to that property. I'll explain a little bit more about that in a moment. The purpose of that modification seems to be to avoid double counting of the same benefit, but it may not actually have quite that effect. Remember that in calculating a defendant's benefit of general criminal conduct, the court is considering all the criminal conduct of the defendant. But where the defendant has been subject to a previous criminal lifestyle confiscation, the benefit identified in that previous criminal lifestyle confiscation order must be taken to be his total benefit of his general criminal conduct up to the date that order was made. Right, that's all a little bit complicated, so let's give an example. Peter was subject to a criminal lifestyle confiscation order on the 8th of March 2016. His benefit found in that order was £300,000. So if we pull up his confiscation order from the 8th of March 2016, we've got the date and the amount benefit, £300,000. That included, as it happens, £25,000 of equity in his home, which was then assumed benefit of property held after the date of his conviction. His total available amount was £100,000. So, as you'll appreciate, Peter would be ordered to pay £100,000. Peter paid the £100,000 without selling his home. Peter has since been convicted of further offences committed in 2018 and is to be subject to a second criminal lifestyle confiscation order now in June 2020. So the relevant day for this new confiscation order is not 6 years prior to the date of charge, because it is the later date of 8th of March 2016, the date of the latest previous criminal lifestyle confiscation order. So that the period we're going to look at for the statutory assumptions that apply after the relevant day doesn't overlap with the period that was under consideration when that order was made on the 8th of March 2016. And the equity in Peter's home, if he has retained it, appears to be outside the scope of the statutory assumption on this new confiscation order, because it was included in the previous criminal lifestyle confiscation order. So Peter's total benefit to be taken into account in the confiscation order to be made now in June 2020 will include the £300,000 benefit which the court found he had had on 8th of March 2016. That will come straight in as benefit this time around in the new confiscation order. But it will be subject to a deduction of the £100,000 he was required to pay under the confiscation order made in March 2016. So Peter's total benefit to be taken into account in the confiscation order to be made now will be £200,000, that is the £300,000 previous benefit less the £100,000 deduction for what he's already been required to pay, plus whatever benefit the court finds Peter to have obtained after the 8th of March 2016. Okay, I hope that example makes it a little bit clearer how the previous benefit falls into the new confiscation order. Of course, one of the implications of that is that it wouldn't make any sense for the prosecution to try and resurrect the earlier confiscation order by way of a Section 22 application, because that benefit, which Peter has not been required to pay previously, is now rolled into his new criminal lifestyle confiscation order. And that's all under Section 8 of POCA. How can Bartfields help you? Well, Bartfields Forensic Accountants remains fully staffed in this pandemic. We are undertaking legal aid and private funded criminal and civil forensic accountancy work. And thankfully, it's relatively easy for us to conduct the bulk of our work remotely, using up-to-date and secure IT facilities. We remain readily contactable by phone, by email, and by online video links. And our recently updated website is full of useful information, accessible, of course, 24/7. You can find more on this topic on that website under the news area, and this and previous webinars can be found in the seminars area of the website. Okay, we'll send a free recording of this webinar to you. And since we have gone a little bit past our time already, what I will do is I will answer questions directly by email or on the website. Our email addresses and phone number are there. I'd like to thank you very much for your time and attention, and get in touch if you have any questions. Thank you.